best Forex indicators to use to actually have an edge in the market and actually help you make money. I'm going to let you in on a little secret, and that secret is that the vast majority of indicators that are out there are complete garbage. They have no ability to predict what's going to happen with future price, and these indicators are something that everybody is looking at, so they don't really have edge. In this video, I'm going to explain to you two different indicators that I believe, and I'm going to show you why, are the most accurate, best indicators, especially when trading Forex. One of the indicators that I'm going to show you is, I wouldn't even call it an indicator. It's just something that once you see it, you're going to have a huge aha moment like I did. I learned this from a guy that literally I saw make $1 million in a day trading Forex at an event I was at in Dallas, like about a month ago. And the other indicator is an uncommon indicator that most people aren't really aware of, but it has very strong predictable power. And I'm going to explain that to you and back it up with proof. Okay, so the first indicator is actually something called a sentiment indicator. Now, most people, when they're analyzing different assets, they look in two forms of thought. Either they have the technical analysis where they're looking at price action, they're looking at technical indicators, or they have fundamental analysis, right? Which is where they're looking at what's happening in the broader scope, what's happening in the economy, what's happening specifically with this particular asset. But what a lot of people fail to actually take a look at is sentiment analysis. And if you're not familiar with what sentiment analysis actually is, it's really, really powerful. Sentiment analysis is kind of like a snapshot of the market participants to get an idea of how are people feeling about the market, but not only how are people just feeling about the market, but actually how are they positioning themselves. So this is a very powerful tool. As we know, market's made up of human beings. Human beings are emotional creatures. And here we can get a look into what people are actually feeling and how they're actually behaving. So if you come on over to myfxbook.com/community/outlook, you can take a look at different currency pairs just like this, and you can see whether the majority of people are long or if they're short. So if I just click on, for example, Euro US dollar, I'll be able to see some information. Now, the main thing that I'm going to take a look at is the herd net long or are they net short? And this is the reason why this is important, because as you know, the herd, or what we'll call retail traders, they're wrong 95% of the time. I bet you've probably heard that. So wouldn't it make sense if we could just actually do the opposite of what the herd is doing, or the opposite of what retail traders are doing? This should in of itself give us an edge in the markets, because it would automatically align us with the players that are actually winning 95% of the time. So if you take a look here on Euro US dollar, you can see the price chart here on the top graph. And then on the bottom graph, we can actually see the net short and the net long position. So essentially, if the red line is above the green line, this means that the majority of people are actually short. And if the green line is actually above the red line, this means the majority of people are actually long. Now, how does MyFXBook get this data? Well, they literally have thousands and thousands of people that are connected to their platform. They have lots of brokers that are connected to the platform. And so while it may not have every single Forex trader on the planet, it still has a vast, vast majority. Maybe not a majority, but it still has a lot of people, which will give us a good proxy of the overall market. So I want you to notice something really interesting. So one thing that's really interesting here is, as you notice here, we've been in a pretty easy to define uptrend, right? And look, as price continues to move higher and higher, more and more people start to go short, right? You can see the shorts long and the shorts short right here. So more and more people actually start to sell as we move into an uptrend, which is complete opposite of what we're supposed to do, right? Isn't the trend your friend? Aren't you supposed to be trading with the trend? And the reason why I love this tool is because it allows us to get an idea of what the herd is doing, so we can just do the opposite. Also, in my opinion, the sentiment is actually the most accurate indicator of what's actually happening in terms of a trend. I believe it's even more accurate than a moving average, meaning that if people are going net short, that means that we're likely in an uptrend, almost indefinitely in an uptrend. And then you'll notice that as soon as people start going net long, it pretty much means that we're in a downtrend, as you can see right here towards the end of this graph. So while the sentiment indicator is not something that's commonly used, it's very, very powerful because it's one of the only indicators that actually tells us real data of what people are actually doing. So by simply just trading contra crowd or against the herd, you should be able to have a stark edge in the market. Now, the second indicator that I think is really, really powerful is not actually even an an indicator, so to speak, but it's a modification of an indicator that we're all really, really familiar with. And the quick backstory is I was actually at a Forex trading event in Dallas, Texas, like a month ago, and I got to meet this guy that was speaking on stage. He was like this hillbilly cowboy type looking guy that was wearing Wrangler jeans, flannel shirt, was kind of scruffy, messed up, had a big old beer belly. And I didn't really know if he was sure what he was talking about or not, or if he was legit. But actually, at the end of the presentation, he showed his trading account, and I saw that he had made over $1 million in a single day previously during that last week. And so one of the biggest takeaways that I actually got from that event was this strategy. So most people are really familiar with the concept of support and resistance, right? And we've heard that talked about time and time again. However, when we're trading Forex, sometimes Forex can be really difficult because when we're looking at, for example, this chart, the Euro US dollar, you can see that, the numbers can get all weird, right? It can be like 1.03361. Like, what does that actually mean? And he said, well, if you really think about who's participating in the Forex market, it's really these central banks that are defending their currency, right? And they're not saying, hey, we need to defend 1.03361. No, they're saying, hey, we need to make sure that we defend, $1.03, right? That's what they're thinking. So there's this concept known as whole numbers, or it's also called the quarter strategy, where if you break up a currency into its denominators, like if you think about a dollar, right, it can get broken up into a quarter, it can get broken up into a dime, it can get broken up into a nickel, it can get broken down into a penny. And if we think about support and resistance like this, you'll see something really interesting start to happen. So here I just put a line at $1, which you can see was a major area of support and resistance. Now, if I just come in here and I go and I start putting these at certain levels, I don't want to put it at 1.01040. I just want to put it at $1.01, right? And if I just do this blindly, and again, try this for yourself, try it on any chart. I can go in, I can put this at $1.02, right? And I'll just do this completely blind. I haven't done this on this chart, so to speak, but I know it works across any asset pretty much when you just look at it this way. And then I'll put $1.03, etc. And I'll do it one more time. And I'll put this one at $1.04. And I'll put this one at $1.05. Now, the funny thing is that I just went and I randomly did this, right, without really looking at things. And if you look at it, I mean, this perfectly lines up. Look, $1.01 was support. It was support. Okay, if you look at $1.02, boom, way back here, this was a resistance level. A resistance level is also a resistance level right here. $1.03, you can see that this was support. We had several wicks into here. $1.04, you can see this, boom, it's acting and playing out. $1.05, this was pretty much that wick to a pinpoint. And so what you'll notice if you start to do this is you'll start to notice that currencies tend to move from these zones to these zones. So they're moving from these whole numbers to these other whole numbers. Now, it doesn't just work on Euro US dollar. You could take a look at USD JPY, for example. And in this case, it made more sense for me to break it up by nickels. So you can see that we had 130, then we had 135, then we have 140, 145, and 150. And if you look at this again, you can see that these act almost perfectly as different support and resistance levels. And you'll notice that once it crosses, it tends to trade up until the next zone. As you can see here, time and time again, that once it crosses these key levels, it tends to trade to the other zone. Oh yeah, and hey, by the way, if you're finding this helpful, then you'll definitely find this even more helpful going over to fundedtraderfasttrack.com, and we'll actually set you up live in the morning with a 10-time funded real professional prop trader. So that way you can trade the Forex live every morning with somebody that's been doing it for years. That's one of the most consistently profitable Forex traders that I know. It's exactly how we were able to take a guy like Carlos, an English teacher that wasn't making more than $1,000 per month in his country, to becoming funded over $800,000 and completely changing his life, buying his wife his dream car, buying his dream truck, adding additional bedrooms into his house so all of his kids have his own house. If you'd like to learn how you could shortcut the path to Forex success, then check out fundedtraderfasttrack.com. Now, we can also take a look here at gold, for example. I've gone ahead and I've broken it up by quarters. So here you can see I had 1750, and then I went and draw 1775, 1800, I drew a 1725, and I drew 1700. And you'll notice here, right? Boom, this is acting perfectly as support. This acted as support. you can see this constantly. We're getting bounces off these levels in plays until the next quarter. So using these two indicators in conjunction, understanding that currencies and assets generally trade to these next hold numbers, which by the way, 1800 is going to be a really strong level, 1900 is going to be a really strong level, 2000 is going to be a very strong level because they're even bigger hold numbers. But if you can use these two in conjunctions, knowing when these assets are going to trade from whole number to whole number, and also taking a look at the sentiment to get an idea of the direction, then you can have a really, really powerful Forex strategy and edge. Hey, the next thing that you need to do, considering all of this, if you'd like to be in the top 1% of traders, then I've put together 10 simple tips that are proven by data that if you do them, then it'll almost guarantee that you become in this top 1% of successful Forex traders. So go ahead and check that out right now.